Hello traders, welcome to FreeFX. I'm Francesco. So today we're going to talk about S&P 500, obviously SpX. It's Monday the 29th of August. We're coming to the end of the month. This month has been quite incredible. Real change last Friday especially, but you know, we've had a few days of price moving, the bear market rally in the last couple of weeks kind of being declared dead, if you like. And then obviously this week we're going to September. So the end of this week is the non-farm payrolls, and then we have a few kind of indicators this week and data releases which will have an impact on data. But also next week is the US holiday on a Monday, and then children kind of go back to school. So it's sort of marking the end of the summer period and start of autumn. Well, it's not technically the start of autumn, but it marks that passage to fully into September, and then we'll look at that in a second. So let's start a video today with seasonality considerations, because today it's been a very quiet day. So let's go to the charts and see what happened today. This is the S&P 500 SpX on TradingView through today. You can see that on the daily, it's a very tiny candle here. This tiny candle means that we've had very little. If it sort of look, well, I'll just show you this. Okay, so this is the hourly for today. So we started the day at let's call it 7 o'clock there, right? 7 a.m. So the range has been extremely small. You know, from 404015, let's say, to 40, that's 4047, something like that. So 30 something point. It's a very, very small range, and you know, you can Bollinger Band this all you like, but it's not really going to give us. These are all the things that I looked at last week as well. Volume, etc. But today I'm going to go into a bit more detail. We looked at sort of open interest for options, and we looked at other things. And just to give a bit of a flavor of today's video, I usually open with this chart because it's the obvious choice. If you want to see what's happening, look at the chart of the price itself. And the ATR was another consideration. So I showed you before that when we had this turn here back in January, we had a period of about 3 weeks from roughly 30th of December to here, so 21st of January. So roughly 3 weeks. And interestingly, we just dipped below the 70. This is the ATR, by the way, 21 period. We just dipped below the 70 level. This black line is a 70 level, and that happened here on the red marker there, 2nd of August, sorry, 12th of August. So if you add 2 weeks, that's the 26th, which takes us to obviously last Friday. Today's the 29th. So we have basically 1 week, and that takes us to the end of this week, which will take us to non-farm payrolls, by which point, if things repeat the same, which they may not, this will pick up and rise above 70, and we'll see a new bout of volatility. Because if you can see here, we've had this sort of great, I'll just take the VIX for a second. You see the VIX has risen above 25. We're at 26.20, okay, since Friday, but today it hasn't really moved that far. But it has moved up quite a bit since the last bit of August, so 18th onwards, from just below 1959 there, to 26.20. So the VIX has moved up, but the ATR hasn't yet. And if you kind of compare again to the previous example I was giving you, the VIX was moving higher, but the ATR was moving lower. And then the VIX had a second shot, it shot up again, it had a second move higher, and then that's where we came up here. So this crossed 70 when the VIX was at 26 roughly. So around the same level, actually, if you compare where we are now. It's the same level that we were at when the ATR crossed the 70 back in January. So I'm actually really curious to see where this is going, because everything's telling me that we are actually on the cusp of that. So number one, ATR prediction to the end of this week into next week, crossing higher than 70 on the daily, and SpX going up above the current levels and into the 27 and above, with a high there of 31 potentially. So we might see that happening or may not, but that's going to take us into the next leg down. So if you look at the chart without the VIX, just to kind of make it a little bit more legible, that's your Bollinger Band, 2 standard deviations with your basis, which is the orange moving average there, and the weighted moving average is just crossed below the orange, always a sign, but a lagging one, obviously, as you can see here in June. But the crossing over is only the first part, and then you've got a further move down, and clearly we have a lot to go down. So price can push the Bollinger Band quite a bit down before it starts shrinking and compressing, so the standard deviations bands can expand quite a bit, and the expansion phase in this case lasted 4 trading days, and we only just started expanding on Friday. So we've got today, tomorrow, but let's start from today. So today, tomorrow, until Thursday essentially we could be expanding, and we've got Friday. Now I don't know what will happen on Friday, obviously, so whatever the non-farm payrolls will say. But I was listening to Loretta Mester today, and she was talking about in this video, she was talking about what the inflation being the focus, what the focus of the Fed is, this video here. And she was interviewed by the Washington Post, and she talked about the role of inflation and how the Fed is really just focusing on that. So she's saying that price stability is what's going to bring stable employment or better employment. So we need to have that before we worry about unemployment, and that's really the main thing that we've sort of, it's a dual mandate for the Fed. We've kind of been talking a lot about, or what about if the job numbers are not good, etc. But at the moment, even if the jobs on Friday came out weaker than the last month, it was really strong number. It can beat expectations. And there was a reading that, if things are not going so well in the labor market, in the job market, then the Fed will have to sort of rethink its strategy. But at the moment, it's all about fighting inflation. So the numbers are not really that important as well, because she says in this interview that it's, and the interview, as you can see, is from August this month. So it's very relevant. She's saying it's not really something to do with, you might hear reports that commodity prices are coming down. There's a slight drop in sectors of the economy in terms of price, but she's saying that it's not the data that they look at regularly at the Fed. It's not showing that the impact on inflation of their efforts is going through the system yet. So there's quite a lot to make sure that the inflation is coming down uniformly or across the board anyway, for them to feel that they are making progress. So that we're not there yet. So any idea that this is just going to go away, it's basically poppycock. So close that. So S&P 500. Now, I've mentioned before that John Kicklighter has in his videos this chart, which I don't have, but it always shows through a number of years sort of average of the S&P 500, and February and August are some of the worst months in terms of volume, and there are other things to do with volatility and performance. These three things are shown in the graph, but what really sticks with me is the fact that volume is very low in August and February. So if you look at this chart, which I found through isabelnet.com, you can see there's from 1964 to 2020. Now, similar charts to this have sometimes 2008, 7, 8, 9 taken out. There was another chart from this website which had those 3 years out, so X 08789, but this one is not. It has, you know, everything, but because the period is wider than the other one, in substance, what that means is that it averages out even without the 2008 financial crisis. So it's kind of smoothed out, I'd say. That's basically what's showing us that February indeed is a very low month, and then February gives you sort of average return, says 0% essentially, and then the second next kind of worst performance is September with minus 0.4% average return. Positive in February 54% and 54, and September is 47. And there isn't really a lower month than that if you look. So 51 July is also pretty poor. So essentially July and September. And you look at sort of the worst. So the worst of all, October, surprisingly, and before that is minus 15, which is August. So looking at all this essentially, and standard deviation as well, October is the highest, and followed suit by January, and then followed suit by 4.8, which will be August. So what that tells me is that August to September is a pretty weak time in terms of performance, which means obviously that we're going to push lower on prices on the S&P. There's been a lot of talk of, you know, breaking the 4,000, which is a sort of psychological mark, and we broke 4,000 obviously already. That was back in June, and we sort of just got up above it, back to the sort of 43,000 level, and now we're heading lower towards that 4,000 again, perilously fast, I'd say. So that obviously tells us that it's gathering momentum. So ATR, volatility, the VIX, expansion of Bollinger Bands, historical performance, seasonality, as I said, September not good. Then I'm going to look at this. So this is the data that shows volume, and I sort of gathered it all together and put it in a chart, which I'm very happy to show you because it's this. Okay, I'll just show you that briefly. So the chart I put together doesn't show the months, but it shows you the data points. So here are the data points. So if I want to know, for example, September, so the chart starts in 2019. I'll just take it down. Should we? Okay. So the chart begins in 16, and January. So August of 16 is data point 73, which obviously is inverted because it's kind of time sensitive. So that would take it down here, unless it's been inverted. I'm not sure if it's the right order. I think it's because it's inversely. What I'm going to try and do actually is take this and cut it. I'll delete the chart altogether, and I'll maybe just reverse that. Let me think if I reverse this. And essentially I'm just going to reverse that to HZ sort, newest to oldest, oldest to newest. There we go. And then it says expand the selection. Next selection, since you have not selected it, it will not be sorted. Expand the selection. Okay, that's it. Now that is the correct form. So what I'll do is just check that it goes to the end. So what this is going to show us is volume monthly, and the reason for that is that we have quite a bit of data there, and it's really important that we have that data to have a sense of how volume looks month in and month out, and this has come out wrong for some reason, so I have to copy that and then sort of delete this space here. So yeah, it needs to be seen to be understood. Basically what I'm trying to say is that we have visual on that. Okay, so I'm going to take all that, delete it, and restart it at the top. That gives us everything we need. I should do, and put it onto here. Has it worked? Maybe not. Okay, try that. Maybe if I just pull it all up. I won't do that. I think maybe I could sort of delete this. Delete. There we go. That's better. All right. So I've got all the data I need. I'm just going to go and put all the volume in the right order there. That's fine. Insert a chart. I'm giving a bit of a lesson in Excel, which is not really what we're here for, but anyway, might as well. Charts. If we go to charts, I'm going to do a line chart. Just kind of keep it really simple. That it is. Now, just one thing. The volume is fine. I'm just going to check something. Okay. Format cells. If I look at number, we've got everything there decimal. Okay, that's fine. Just checking that it's all okay. Charts fine. Okay, let's put it this way. Okay, that's better. It's actually inverted, so that makes a lot more sense. Okay, so that's the chart of volume, and essentially, I'll give it a title. Volume. Volume 2016 January to August 22 SpX. Monthly SpX. Alright, so that's the volume. We've got everything we need. Just need to sort of decide what we want to do with this. And what we want to do with this really is to see where we are at the moment. So volume been dropping quite a bit, which is surprising because we had a pickup in activity, but volume has actually been decreasing through August, and we are currently quite low in volume. We are down to these levels, so 0.68 on here would take us to there, which is August of 2021. So we're kind of similar levels to August of last year. Now September of 21 was from 41, it went up to 43 billion, so 2 billion more. And so from 0.68, which is there, to 69, that's 70, so 69 is just in the middle. There's a pickup, as you can see, then it dips and then it shoots higher. Okay, so that was the 2021. So we may see that picking up again. And another thing that we see there is kind of historical averages. So in 2018 we had a bit of a dip, and let's see 2018. What happened in September of 2018, for example. We had this, okay, 34, from 38 in August to 34 in September, and then picked up in October at 50. What these numbers mean, by the way, just in case you wonder, is that let's go to the top. These are the sort of I think it's the open and close and etc. And if I go back to this, it will show. So it's the date, of course, open, high, low, close, change. Okay, so we've got the change, and it's divided into two areas, so percentage and actual points. So if I go back to here, the change we can see in percentage from September 2018. There, September is plus 43% from August to September, so 3% higher. Volume is at 38, so volume is increasing, but performance is decreasing, or price change rather. Volume decreases again, and performance decreases again, and then finally volume picks up suddenly, and this slides minus 6.9%. Volume drops, volume picks up, and this happens. Now, there might be a pattern in this. If we look at February, as I said, February is one of the bad months as well. From January to February, we picked up in volume, but we had a bad performance. But that's just one example. We need to see a pattern. So if we see, for example, May going to June and July, volume is dropping considerably from June to July and picking up in August. This drop that we see here is then reflecting into price. So why am I telling you this? It's because, save this and close it, is because another thing that I looked at, so this is STOOQ.com, STOOQ.com, and it's a website that gives you historical data, and I think it's in Polish, and then this bit isn't in English, but you sort of have to navigate your way to this in Polish first. And it's historical, as you can see that that's 1789 to 2022, which is very interesting, but the volume data, not sure if it's available that far back, but certainly it's you can keep going with this to your heart's content and see sort of how things develop. So that's that. This is price now, and then I'm going to show you something else, which is we looked at seasonality as well, and the other thing I'm going to show you is on-balance volume. Okay, so if you don't know what on-balance volume is, it's an indicator, and it provides a running total of an asset's trading volume and indicates whether this volume is flowing in or out of the security or currency pair. So it's a cumulative total volume, positive and negative. So the theory is that it's a predictive indicator rather than a lagging indicator, so that eventually volume drives the price upward. For example, if smart money buys into an asset, volume may increase although price is relatively level because maybe the rest of the market are selling it. Eventually volume drives the price upward, so you start seeing changes in volume before price. So in the example I was showing you earlier from the S&P 500 volume data, you could see the volume dropping, the price was actually taking higher, and then eventually slumped down the next month. So this is interesting for us because here's what I've done. This is the E-mini futures, CME, and you can see two things going on here. I've got the on-balance volume here at 21 periods, SMA, smoothed moving average, and you can see two things. There's a divergence which I've marked in blue. There is your price and there's your on-balance volume. Okay, so generally speaking, volume dropping is price negative. So what I did in a previous video, I was looking at this and I was telling you that on the 26th, which was Friday, we had one of the highest volumes in a while. It was 2.14 million, and we hadn't seen that, I think it was since the 13th of July, and before that it was the 30th of June. So I gave examples and I looked at economic sort of calendar events, and it wasn't really related to that. But Friday it was obviously the Jackson Hole speech. But so you could say, based on this, the volume has been increasing, because I said before the volume has been steadily dropping. If you take these highs and draw a line, it's been steadily decreasing, and now it's had this peak. You might say the volume is been picking up, but the on-balance volume tells us something else, which is I put this sort of line through the lower highs. We had this peak here, but essentially it's been dropping and price has been picking up. So is price going to catch up to volume now and start dipping as we've obviously seen on Friday? So today was a particular day because we haven't had much of that. So it'd be interesting to see, you know, within reason soon, whether this continues. So here's another example of what volume indicators can tell you. And with futures, you don't get sort of continuous contract. You can get continuous charts, but indicators don't really work. They work on the current sort of contract. So this, you know, will go back to some degree. But let me just see. Yeah, it's kind of a bit distorted, so it doesn't really kind of do it properly. So unfortunately, that's what I can show you. But that's enough because it goes from you know, June to September. So that's a fair chunk of data, really, and it's reasonable to work with that just in a short term. The video is finished. I'm very happy that we've had this look at volume and how we can look at volume and sort of what things we can gauge from that to help. There are things like Anthony Crudele talks about volume weighted average price, VWAP, and he uses that for setting kind of trading targets. Anchored VWAP, he calls it, on a 3-minute chart, looks at the first kind of opening of the market range, and then if the market moves within that range, or if it breaks higher and then comes back into the range, etc. So there are ways to work with VWAP as well. There's also histograms, which I can't get on the CME because you have to be on an upgraded plan to get the sort of volume profile, and so you can't get that, but the indicators are there, but it just won't show you anything. So you might want to use a different program, with Ninja Trader or whatever you want to use, that gives you the histograms, so that you can see, like on the side of price, the bars showing you the concentration of volume distributed along price. And there are loads of programs to do this nowadays, so it's just kind of, they tend to be paid for, whereas I use the free version obviously, so I don't have that. But I showed you enough about volume today and seasonality to show you that you can get this data for free. So it's a little bit more clunky and you have to do a bit more work because it's not directly on your chart. You sort of have to work around it a little bit more. So the volume bars obviously are subpar because they don't really show you the buying and the selling. They just show you the kind of the overall volume, and on a CME, and then it's just coded to the day close. So if the close was negative, it'll be a red volume bar, but it's not really telling you the distribution of buyers and sellers in the day, so that's not as helpful. However, working with histograms is a bit of an art, and you know, you can get clusters of volume above price or below price, but it's sometimes hard to tell, for me personally, whether that means that there is a demand zone there waiting, or a supply zone. As soon as kind of your price comes to that level, it'll be sort of sucked lower basically. Or similarly, if it's the big concentration of price above of volume above price, you know, what happens when it gets there? Does it get rejected? Does it get? And sometimes, you know, you got a concentration of orders and it looks like it's 50-50 buyers and sellers, or long and shorts, and so it doesn't really tell you always. It's not always a magic kind of bullet that tells you exactly what's going to happen to price. So again, all these things kind of together give you more tools to know probability. It's just an added thing, but it's obviously the more things you add on, the more things you have to keep on your watch, and it adds time. So again, it kind of feeds into that, how much time can you dedicate to the charts, and whether you just want to keep it simple, you know, and go that way. But I hope that was helpful, and I will see you in my next video, which will be at the end of this week on Friday, when we've had non-farm payrolls, we've had all these things, data through the week, a few Fed speakers this week as well. So hopefully things will be gathering momentum as we get into September midweek. Okay, thanks very much, and please like, share, comment. Yes, I'd love to hear comments, and I'll see you in my next video. Take care. Bye bye.